Hey, good morning. You want to trade some Forex? We can do gold. We can do oil. We can talk about the repo rate. We can talk about the Fed meeting today. Let's go. Boom. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, ever, 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 ever risk money you cannot afford to lose. Hey, oh, still not good. Hey, good morning. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. I salute you. Hey, TradersWay.com. Fast execution speed, competitive spreads, amazing swaps, world-class customer service, and of course, the provider of these webinars to you every single day for free here on YouTube. Pay it back, man. Pay it back. Open an account at TradersWay.com right now. Even a demo account just take you a few seconds, really. When you're in the back office, download MT4. Come back here. If you look at the description below, you can download my chart templates for free. Install it on your Traders Way platform. Good to go. So, like I said, you guys want to talk about the repo rate? You guys paying attention to that? That was the big news yesterday. The Fed had to step in and provide liquidity. Yeah. Oh, but that happens all the time. That happened like 10 years ago. It was the last time it happened. Huh, interesting, huh? So we can talk about that. What else? Fed meeting? Are they going to cut? Yeah, sure. Then what? There's a lot of dissenters now. Trump's not going to like whatever he does. Whatever Powell does or says, or Trump ain't going to like it. So we got an awesome day. It's a good day to be alive. It's a good day to be a currency trader. Oh, sorry, homework. Get rid of that. All right, cool. La 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 la. Where's my coffee? No, that's yesterday's. No, that's 2 days ago. Oh, here it is. Hang on. Fantastic. All right, so let's go, go, go. By the way, do you guys want to do the Fed stuff together? Where's my drawing tool? I thought it was. Where'd she go? Well, make sure you're a subscriber to the Forex.Today YouTube channel, because if I do that, when I click stream, you'll be invited. Make sure you subscribe to the Forex.Today YouTube channel. Okay. All right. Just kind of looking at this. We're stuck in the middle, waiting for the Fed. Makes sense, right? Where would bears sell? Bears were selling here last week. Where would bulls buy? They would buy here. And we're stuck in the middle. Great. Not a lot to do at the moment. Well, we wait for the Fed. Cool. So we got the world's most liquid, the world's most traded asset done in a matter of seconds. Let's talk about the repo rate. The repurchasing agreement market has to do with businesses and banks and all this kind of stuff, borrowing money on the very, very short term. So there's a lot of money sitting around the world that just doesn't get used. Banks have extra money, businesses have extra money, like Apple, for example, has 20 billion just sitting in cash. So you could actually deploy some of this capital and lend it to people that need it on a short-term basis. One example of that would be, I know during the financial crisis, General Electric had a lot of problems. General Electric builds things like nuclear power plants. It might take years to complete the building of a brand new nuclear power plant, but along the way, General Electric needs to pay salaries, they need to pay for to have the lights on, they have to pay for lunch being catered for their sissy executives, they have to buy tools and equipment that the employees use in the production and building of a nuclear power plant. So even though eventually they'll get paid their $9 billion to build a nuclear power plant, along the way they're going to need some cash. So it's a cash flow issue, right? It's not a balance sheet issue. You can say, well, we have all these liabilities, but we have all these assets coming in that looks fine, it balances. But there's a cash flow issue where you might have to wait years before you get paid. So on the short run, you need to go and borrow money. Well, what if you need to borrow money for a day or a week? Okay, it's different. You don't go get a mortgage for a week, right? House flippers would love that, right? How much for a 2-month mortgage? So there's a market for this type of need, of course, right? Because bankers are going to step in and say, So they connect, let's say, excess cash, which is supply, with demand for short-term cash, right? And they're typically extremely low risk in loans, if you want to look at it that way, right? All right, so this market functions in the background. It's part of liquidity, meaning, again, someone just needs some short-term cash, and there's lots of short-term cash available. The market is liquid. During the 2007, 2008, 2009 period, there was a time when General Electric, a well-recognized company, one of the largest companies in the world, needed to borrow money in the repo market to keep the lights on. Short-term cash flow, right? They couldn't get it. They couldn't get it. They couldn't get it. It's really amazing, right? It wasn't available. I think they had to sell their appliance division to raise the cash. So anyways, this market functions almost invisibly. Nobody really cares unless you're a big multinational corporation or you're a bank providing these short-term services and you're making a spread. You don't really care, right? Like, no, this doesn't impact people on a normal, regular basis. Well, yesterday, first time since 2008, there was no money. Whoops! So the Fed stepped in and put money. How much money did the Fed inject, you say? And I say, well, let's put it this way. People talk about Apple having a huge hoard of cash that they're not using. Okay, Apple is sitting on $20 billion in cash. And it's not all from profits. In fact, they went out and borrowed money from the bond market back when interest rates were extremely low, and they knew it was basically free money and stuff. So Apple made a lot of smart moves, and they have all this extra cash. 20 billion, right? That's a lot. That's more than any other company, I believe. Okay? Now get this. The Fed yesterday injected 75 billion. 350% more than Apple. And they're going to do another 75 billion today. Oh my God. Hey, a billion here, a billion there. Pretty soon that adds up to real money, huh? So 150 billion in about 24 hours that's a lot of billion. So that happened. The question is, should we believe it's the end of the world? Should we freak out? Should we buy gold? Should we buy bonds? What's going on? Well, we don't know yet. That's the real answer. We have to find out if it was a short-term blip. There was a lot of corporations needed cash to pay taxes, like in this period here. So they may not have been willing to loan it out. Now, it's a problem if you don't trust the companies that are borrowing the money. You're like, yeah, I could loan you this money. Imagine this. I can loan you this money for 2 weeks, but I don't think you have it. Was it 245 or 24.5? If I got that wrong, then I apologize. I actually don't follow that company that closely. I thought it was 20 billion, but 245 billion sounds like a lot. But yeah, okay, apologize. So put it in that case then, the Fed injected 150 billion basically in 24 hours. They did yesterday, they're going to do some more today. So anyways, 150 B is a lot. So should we be worried? I think it's a blip in the matrix, but if it continues moving forward, it's going to be a problem, because then it sounds like, or it would point towards being a trust issue. Okay, you know what I'm talking about? So that's where we are. I want you to think about it. I don't know the answer to it. You don't know the answer to it, so it comes down to opinion and stuff. So one-time blip in the matrix is quite alarming, but if it went on for a couple of weeks, yeah, that's going to be a problem. Also, the one thing I did want to talk about too, now, new topic, dollar's been strong for a while. Do we need to talk about that? No, probably not. Oops. I guess we could. Why is the dollar strong today? I guess we should go into a 15-minute chart. Why this move down? Well, one thing going on today is the Fed's likely to lower interest rates. So if you wanted to buy a bond and lock in an interest rate, do you want the higher interest rate that you can get right now, or do you want the lower interest rate in a few hours? All right, guys, so I apologize for the Apple example. I just did that from the top of my head, and clearly I was wrong. Sorry about that. Highlander says, is that M1, M2, M3 money? You know what? I don't know. Yeah, so the answer, guys, is you want the higher rate, right? So that means anyone thinking about maybe buying some government treasuries is kind of forced to do it today. So you could always think about this, like whenever the Fed is about to cut interest rates, you can imagine 48 hours, but certainly 24 hours before let's say the London session before the news, you could expect the dollar to get strong just as foreigners want to lock in higher interest rates. Because they're going to cut, right? We pretty much know this as factual. So if you wanted the treasury, you can get it now or later. If you wait like just till this afternoon, you're going to get a lower interest rate. So you might as well do it now. And so if foreigners are doing that, then they need to buy dollar first and then they buy the treasury. So I don't know if you want to use that as like sort of like as a raison d'etre for short-term scalping on a day like this. You can mark it down in your calendar. Think of it this way, guys. If the Fed is going to cut, let's say, 2 or 3 more times, that's one of the questions that people are asking right now, right? Now, why do they say that? Because they're worried they want to know what's going to happen in the mortgage market? Yeah. Are they interested are they interested in what's going to happen in the credit market, like even credit card companies? Yeah. Lower interest rates also tends to make people spend money. Are you worried about sort of that macro effect? Yeah. But as a trader, are you also interested in maybe opportunities to scalp into the Fed move? Yeah. So you can write that down. If the Fed is expected to cut interest rates, on what days are they expected to do it? Wow, still a little sick, huh? if the Fed is expected to cut interest rates, on the days they're expected to cut interest rates, you could front run a dollar strength as foreign investors are locking in to this morning's higher rate in advance of this afternoon's lower rate. Just makes sense, right? Like it's not a trick or something, right? You see what I mean? Like it's just an understanding this is what people are doing, and you could also do this. Now, we have discussed it multiple times before, but I just want to point that out in case you're new to the channel. Okay, a foreigner cannot buy U.S. treasuries unless they have U.S. dollars. So they buy the dollars first, then they buy the treasuries second. That's why the dollar gets strong into that move. But it has to be foreigners doing it. So, how about this? You're a foreigner, you live in Euroland, and your 10-year treasury pays you 0.2. Okay? For 10. I don't know what it is actually. Okay? I don't know what it is. It's like nothing. But right now, here and now, if you bought the US 10-year, you can get it for 1.8%. Sounds pretty good, right? Now, what if you're worried that this is going to drop to 1.5? Well, it's probably going to happen this afternoon if that does happen that way. So you might as well just lock it in today. You see what I mean? It's way better than this, but isn't it relative? It's relative, right? Because you don't want 0.2. You like the idea of 1.8, but you're really upset. You're like, but if I wait a few more hours, I'm only going to get 1.5. So you lose 0.3. You're losing 0.3, and then you're like, but that's almost like the whole investment into German boons, right? So you're like, wow, I got to get going. Because you don't want the 1.5, because relative to this, that's a big loss, and you would love to have a locked-in guaranteed winner, so you might as well just do it now. Okay, just a thought process. So, will the Fed cut interest rates, not today, but in the December meeting? If so, when in December? What day? And if so, look for opportunities 48 hours, but specifically really 24 hours before the decision. Look for dollar strength and scalp USD up. Okay? Okay? What do you think? Smell like a plan? Then maybe again in January. And then maybe March. Is that a good tip? That's Wayne's tip of the day. Boom. Huh? You likey? Yeah, 43% of the time they cut every time. Right, Adam? Yeah, so Adam, that number has changed based on the dissenting presidents. Yeah. Hey, make sure you do the little thumbs up thingy, huh? They've been low lately, so I don't know if you guys think the webinars have been horrible, you're like, those webinars are horrible. Or if discipline has been leaking. Anyways. What about after they cut? Well, it comes down, Sav, to what they say. Okay? Remember, we're not interested in the cut today. We're interested in the next cut. This is never about now. Everything in finance is about the future. Finance, the whole principle of finance is to today's value of a cash flow going into the future. Okay? And so same thing, like if you apply a financing mentality to a market, you say, it's not what the Fed did now because we already knew they were cut, so we've already factored that in. But what we don't know is what they want in the future. And so anyway, so it really comes down to the new information that Jay Powell provides us so that we can create new cash flow statements and then discount them appropriately. You have basic macro from your accounting? The heck is that pure mathematics? Why would an accountant do macroeconomics? That's interesting. So it's only enough if you understand. Okay. Here's how you answer that question, pure mathematics. Is the Aussie dollar going to go up or down in the next 6 months? If you can convince yourself of an answer, then it's enough. What time is it? Oh, we got a couple minutes yet, huh? Nicholas says, what currency will the dollar move the most? Well, that has to do with, is the dollar strong or weak or neutral right now? And compared to something else. What else is strong or weak or neutral? Okay, and the idea is it's all relative. And you want to do relative strength exercises. There you go, bud. Get in on that. How am I feeling? I feel fine, but obviously I'm still sick. Baby. So anyways. So if you want, we can do a relative strength exercise, Nicola. Yeah, but you know, stuff like vitamin C and stuff after the fact makes no sense. Yeah, no, I get it.
The housing starts and building permits data in Canada, CPI data in just a few seconds. Starts 1.36 million above the 1.25 million expected. Prior buys 1.22 million, up from 1.19 million. Permits at 1.42 million, well above 1.3 million expected. Canada CPI core median at 2.1% is in line with expectation. Common core at 1.8% is 1/10 lower than expected. The core trip at 2.1% for August CPI in Canada. Headline month-over-month at minus 0.1% is 1/10 higher than expected.
Year over year, it's as expected. Core, a little less than expected. So core was 1.8, and they were hoping for 1.9. Year over year, 1.9, and got 1.9. So no real amazing news. Now, if you're a price action trader, you're kind of watching this area with, you have it this way if you're a price action guy. So you're thinking 50% to 618 basically. Now scalper is trading the vol, and that I typically do this way. Okay. I'm going to filter it through the 5. That looks pretty scary. So if I'm scalping, I get 100% retracement, I walk away. Yeah, FX Mod, that's true. And you should know this. I have many videos I've done on YouTube that explain it. I wrote a book about it that explains it. So let me try to get you the videos here.
New York Fed, as expected, taking $75 billion of Treasury securities into repo operation today.
$80 billion in bids, 75 million accepted.
Well, are they talking repo right now, Bubba? See, you're on the clue chain, bro. I bet, right? You weren't even thinking repo this morning, and all of a sudden we're catching it live on Trade the News. Oh, it's a playlist, I think. Here you go.
Right? So even if the market is down, right? If the market is down.
There you go. This will go over the moving averages.
Price goes up all the time in a down market. So that's why I want to separate the two. Measure what's happening in the market, and perhaps I can make a decision on what I want to do throughout the day. See, that decision is called a trade plan. What if the market's falling based on what I see the 2155 doing? Early in the day, I could say, well, look, the market is down. So I want to look for reasons to short. Well, what's a reason to short? Well, how about pull the trigger and sell the currency pair every time price moves to the downside? That's the whole premise of what I'm showing you.
Oh my God. Okay. There you go, FX Mod. Or is it MAD? Got it. What do you think? Smell like a plan? Yeah, so anyways, what I was saying here, based on the high volatility event driven strategy, which you guys should already know because I've taught for 13 years, 100% retracement like we got, I back away from that strategy, so it's done. Like no trade, no nothing, walk away, because it's that particular high volatility event driven strategy is based on a continuation pattern. Okay, and on a continuation pattern, you can have a 382, you can have a 50%, you can have a 618, and the whole premise of it is that price will do that in the future. Okay. But to make 100%, and by 100% I mean
reportedly wants to reduce India debt to improve chances of selling the company.
That kills it. what we were looking for, hoping for, is something like this. Okay. So right now, dead. Now you might want to find a different currency pair. It might just be the move versus the dollar. So we could do the move versus, I'll just leave it here. Why don't we move this to Kitty Cat? Crazy, crazy, baby. There we go. CAD yen. And maybe that's a better move. Can't find a better move. Oh. Even then, that's not good. Really, if you're using price action and stuff, you really wanted to keep it above this area. Actually, I'll include 50%. Okay, so all of this is too big of a retracement for the high vol event-driven strategy. Okay. Yeah, that's right, Max. That's why you need to know how to do multi-time frame analysis. You also need to know time of day. You also need to know seasonality, which you also need intraday knowledge. The currencies move differently throughout the day, and and each individual currency has its own mask, is how I like to say. So yeah, you need to know all of that for sure. That's why you need a trade plan. You can't just stare at this chart and trade, which I know most people try. And you can't just stare at this chart and trade. I know most people try. But the people that try already know you can't do it. Okay? Now you can have something like this going on, but that's not a high volatility event-driven strategy. You have to be clear what your trade plan is. So my high volatility event-driven strategy has failed. It's done. Over. Vamos. Adios. Okay? Now you can go back to doing whatever you wanted to do earlier. And that doesn't change very often because it's a bias. My bias changes every few years. Unless we're talking about seasonality moves, then that changes really only a couple of times a year. Okay? So if I wanted this yesterday, I still want it today, so I'm still setting it up now. But I can say my high vol trade is dead. Ish kaput ya. Okay? Name. They. Who's they? They will manipulate your strategy since you're making it famous and you will be out of this. Really? You really honestly believe that? That makes no sense to me. Okay. If everyone did my trading strategy, I would make more money. But anyways, I don't have a weird strategy like that. I don't have a strategy. I have a methodology. When I say strategy, I mean bias. But like strategy in the way that you describe it is more like tricks of the trade or something. I don't have that either. Here's how I think you should have a strategy. Like strategy in that sense. What is your methodology? Your methodology should be a sound understanding of how the foreign exchange market works, both technically and fundamentally. No one can take advantage of your knowledge. Now, if you have a little trick or quirk that, that's alpha, okay? That's alpha. You have a little trick, it's sort of like arbitrage. You take advantage of something, some pricing, some mispricing in the market, and you very quickly gather it. By doing so, you expose it, and then very quickly it goes away. Okay, that's an understanding, or that kind of stuff can go away. I find a little quirk in the foreign exchange market where I can make money. then people can understand what I'm doing before I do it. They could either go with it or go against it and all that kind of stuff, okay? Now, a solid understanding of how the market works is not a little trick. You can't, that won't go away, okay? For example, when a central bank comes out and says their currency is overvalued, it's overvalued. And what do you do to it? You should sell it. There's no trick to that. That ain't going away. Okay, so when I say strategy, I mean bias. So I say, what is your strategy on the CAD yen? Are you a bull or a bear? Okay, what's my strategy? Let's discuss it. Oh, I'm a bull. Oh, nice. So how does this affect me in the future? Am I going to sell tomorrow? Nope. Okay. So for example, based on your knowledge of my bias, okay, let's fold this into trade plans. Would I buy it here? Yes. Would I buy it here? No. Would I have bought this again on Monday? Yeah. Okay. Well, Ali, since I use my terminology, then I can call it whatever I want. It's bias, but to me, bias is the basis of strategy. Strategy isn't like trade the 5A cross and all that. That's nonsense. Okay? If you're focused on a mechanical strategy, no, it's just not going to work. I mean, these are tools that you can use for sure, right? But the most important thing here is you know if you want to buy or sell, okay? If you don't know if you're a buyer or a seller, then all these little, as I'm using strategy in the other use of, you know, the combination of technical indicators that put you in and out of trades, then you're trading mechanically, and you're going to be, first of all, inconsistent, and second of all, you're always going to be late. Okay? That's all. So I say, and I told everyone knew. How about this? Every single one of you knew that I was a bull here when the market was down, that I was getting ready to be a bull again, and then we discussed it frankly and openly. In fact, I did training that I was now a buyer in the market. But that's my strategy. Where did that come from? It's a macro econ strategy. It's a seasonality strategy. I didn't even write that right. And then it's a fundamental strategy. So I said in that period when this market was coming down and then sideways, I said, look, there's nothing on this chart that says it's going to go up. There's no technical analysis at all saying that it's going to go up. But it's going to go up, and I'm getting ready to buy it here. Okay? But that's my strategy. Then, with that being said, I use technical analysis to start getting into trades. If all you have is technical analysis, then you don't see it coming. You don't see it coming. And so now we're up here and people are like, well, maybe I should be a bull now. Well, okay, cool. So I employ the idea of strategy differently. So in my book, by the way, is called Strategic and Tactical Forex Trading. The strategy part comes from fundamentals. Okay? The tactics come from technical analysis. Okay? So I already know what I'm going to do before I do it. And then technical analysis confirms or denies that hypothesis. So like I buy this all day, every day. In fact, I did. Looks like I was a week early. Hey, better than a week late. Then again, technical analysis. That's a perfect buy. I could do that in my sleep. Boom, gone. Okay? Is this a good buy? No, not at all. I would never do that, never in a million years. Is this a good one? Yeah. Oh, yeah. That's a buy. That's a buy. Now, we're threatened, of course. I see that. But that's why they invented stops. Why are you so scared? And if this works out for me, then it'll go like this. Okay? Now, of course, I'm worried about this. This predicts a double top. That's why you should use a stop. I didn't say you couldn't get in. I said that tells me I should be worried about a double top. Okay? So all those charts tell me this. But it all sits on the foundation of strategy. I'm not deciding should I be a bull or should I be a bear. Okay. Now, most people are caught in this move, right? Like this. They're trying to figure out what it all means. What does this all mean? You see how, like, well, it's a little confusing. This is supportive and this is resistance, but we were up here, but then we double bottomed here, and then is this a 1, 2, 3? And why did it make a lower low, not go up? These are all very good questions, except on Monday morning you should have bought this. That's it. I have a strategy, and that's my exact price. So in the swing trading group, the Thursday before this Monday, this was identified as a price that I would buy. Yeah, I'd like to catch it around, I don't know, 81-ish. Because we're talking about days in advance, not hours ago. Okay? And people trying to figure out what they're going to do today based on what happened hours ago, they're broke. And they're going to stay broke. You know, traders that have trade plans, they love people without trade plans because people without trade plans are liquidity events. Someone has to buy my short position, right? Or whatever, right? I guess it's the opposite. If I'm short for 3 days in a row, I have to convince some other idiot that they should get short now. Hey, would you like to buy my short position? Oh, yeah, I want to get that short position. Good, boom, right? Like some loser had to sell here. Right? Oh my gosh. Oh, I feel so bad for them. No, actually I don't, because they pay for Harvard. Right? Because remember, if I'm getting out of my short position, my broker has to offset it with a long, right? So we have to convince some, right? So anyways, whatever. Yeah, it's a zero-sum game is what they say. So there's always someone on the other side of your trade, and you should make sure they don't have trade plans. Why buy on Monday? Actually, most of the time I buy on Thursday or Friday or Sunday. Okay, so this is actually Sunday, and I have begged you, and I'll beg again. The funny thing is no one will listen, but anyways, let's do this. I beg of you, okay, at 5 to 6 p.m. Eastern Time, every Sunday, you should be at your chart. That's when the market opens, okay? And while you wait for this over the entire weekend, all of Friday afternoon, all of Saturday afternoon, right? Or not, all of Friday afternoon, all of Saturday, and all of Sunday morning, and all of Sunday afternoon, you can do your research and you should already know your price. Okay? And if you know how to swing trade, if you've taken the swing trading course, then it's elementary. This was the exact price you wanted. Exactly. To the pip. Yeah. And you're like, oh, look, I got my price. Yeah. So you bought here. It's so obvious. It's like ridiculous. Right? It's beyond ridiculous. It's so simple if you know how to trade. And if you have a bias. I mean, there is no more to it. That is the exact price. Not 1 pip lower, not 1 pip higher. That was the price. And you're like, oh, look at that, I got my price. So you bought it, and you're done for the entire week. You got the exact price at the exact time. Okay? Okay? Now, the interesting thing about the swing trading group is we talk about this stuff on Thursdays. Thursdays. So we talk about it here that, yeah, we want to buy here. Do we have any swing traders in the group that can confirm this? There's a bit of a lag but if you're a swing trader in my swing trading group that meets with me Thursday mornings, Thursday morning, we're planning Monday. Can you confirm that this is what we do? We set up trade plans for Monday. But very often you're in on a Thursday. Sometimes you're in on a Friday. Sometimes you got to wait for Sunday. Sometimes it's Monday morning, right? This is your Sunday trade. This is Monday. We had to wait for everyone to get on the clue train. Everybody get to the office. Okay, everybody buy now. Okay? But it's simpleton stuff. It's not complicated. Our human nature is complicated, but the knowledge is not. There is no calculus involved, right? Oh, name, where? Name, HTTP, swing.fxbootcamp.com. Okay. Cool. Right on, guys. Louis says, this is great. This channel's great. Is that how you say it, Louis? Learning good stuff. Yeah, man. All right. What do you want to do now? So we're going to meet today to do the Fed meeting together. Is that right? Make sure, guys, you subscribe to the channel. So when is the news release? Is it 2? It used to be 2:15. I think it's 2. So I will log into YouTube around 1:30ish. And if you're a subscriber, you will be notified. Max says, but wasn't price at resistance? Yeah, but I'm a bull, so why would I care about that? Okay. So what I was saying, guys, if you subscribe to the channel, then when I hit stream, you'll be notified and brought in. If you're not a subscriber, you won't be notified and you'll be on your own. Okay. So make sure you subscribe. All right. So what we were talking about this one. Who was it again? Who says it? Max. But weren't we at resistance? Well, I'm a bull. So what does that tell you? I think we're going to break resistance. If I didn't think we would break resistance, then I wouldn't be a bull. I got probably 10 emails yesterday, people thanking me about the lesson I gave you on consistency. Not being right, but being consistent. Okay. So let me show you how difficult it is to trade with a bias. If you know how to swing trade, there's the preface, but I don't know, like, honestly, I don't know how people trade profitably without knowing how to swing trade, right? No Carly to the YouTube channel. Okay, you ready? Watch. That's a buy. I'm done for the entire week. Max says, well, it's at resistance. Yeah, okay. So if you entered here, let's say you're on the monthly, okay, your stop should be at break even right now. Cool. So if this crashes, then you lose nothing. If this makes a higher high, you can lock in some profit. Now here's the other thing, Max. You ready? Wait for it. I'm going to try to, I don't know if it'll let me. Hang on. Let me give it another click. Okay. You believe this is going to 82. The actual number is 82.27.5. Okay. Then let's add something even more amazing. That's just your weekly swing. Your monthly swing indicates that you are going to, wait for it, 83.5, 83.40, 83.41.5. Okay. So, based on your analysis, your technical analysis, your fundamental strategy makes you a bull. Okay. This is a buy zone. Your conservative target is 82 and some change. And your more aggressive target is 83 and some change. And you've been a buyer since 79. That's called a trade plan. Okay? You understand? So that makes you a buyer here. Oops, I want to do that in blue. Let's do that again. Okay? You want to be a buyer here because you know how to swing trade. That's a weekly swing on top of a monthly. We call that convergence. Okay? Then I don't have an entry last week. Sorry. This week, very obvious. Okay? And they're all part of the same plan. This is the same as that. Okay? And Max says, so what makes you think it'll break resistance? Because I'm a bull. That's it. If I didn't think it would break resistance, then I would not be a bull. See, a bull believes it's going to go up, and I can give you multiple reasons why it's going to go up. And I would say, there's no way this is going down. But if it goes down, it takes me out. And I'm not a bear, Max. If this does this, does that make me a bear? No, it just means I'm not buying. But if I'm a bull and I've done my research and I can give you 3, 4, 5 reasons why this is going up, then I believe, either correctly or incorrectly, we don't know, but my analysis tells me it's doing this, and that's what I do, and I do it yesterday, today, and tomorrow, and I will do it with style. Okay? But I am certain. And I'm certain because of my research is broad and deep. And I'm an expert. I'm the world's foremost expert on CAD yen. So, right or wrong, I believe this is going up then up some more. Okay? But if I'm wrong, my stop loss will trigger and take me out of the trade. Probably for profit. Okay? So for example, I could or maybe should, this trade that I have right here, I could put it right here and lock that in. Okay? So let me do that as an example. Let me do this as an example. Okay, there's my stop. Okay? Boom. 79.81. So I have locked in 200 pips, right? 210 pips. Let me just make this 200. Okay. The worst I can do is 200 pips profit. So Max, I think this is going up. If it doesn't go up, I make 200 pips. But I think we're going to go from 81.5 to 82.5 to 83.5. So if I don't make at least, and by the way, I've discussed this in the past, and I don't know why it's true, and it probably isn't true, but let me tell you, I like to get 333 pips. And right or wrong, it seems like as soon as I hit 330 pips, no matter what the circumstance is, I get a big pullback. So I'm already thinking like, and by the way, there's no scientific, that's only emotion. That's only psychology. So once I'm up to about here, sitting on 333, I'm probably going to exit the market and then catch the next dip. Because what I find is, and maybe this is Elliott wave, is you get, your expansion wave, then you get this, and then at some point you kind of get this, which is a 3-wave correction, and then you move your way back up. So maybe I've just learned Elliott wave where once I catch 333, I take a walk, and then I buy this dip and try again. Okay? Okay? But one of my favorite things in the world, like, Wayne's tip of the day again. Wayne's second tip of the day. One of the things I love to do in trading is to have a 33 pip stop and a 333 pip winner. 33 over 33. Okay? Doesn't mean I hit it all the time, but it means after a day or two, I got my stop at -3. Okay? And after a week, I'm still at -3. And after 2 weeks, I'm still at -3. And like I just locked in 200. Okay? Cool. But see, I don't want to get out. That's the issue, guys. I don't want to get out. Why would I get out? I'm not looking to get out of a winning trade. Okay? Metapore says 10 to 1. Wow. No, but don't make a big deal of it. It's just how I enter the trades. And then after the trade is done, I manage the risk. I mean, you can make it anything. It doesn't matter. But think of it this way. I'm trying to keep my losses small, right? So risk is small, 33 pips. Remember, my lot size relative to my account size is minuscule. So I try to keep my risk per trade low. But I'm also trying to let the winners run. Okay? That's all I'm trying to do. With a 333 OCO, I have plenty of time to manage the upside opportunity. And if I'm wrong on the timing, which is a technical issue, if my timing is bad, then I'll take a small loss and I'll try again. It's not a big deal. That's how trading should be. If you can't take a loss, you're going to be a loser. Okay? If you don't have the discipline to take a loss, you're going to lose all your money. Say it again. If you're more worried about your win-loss ratio and you're trying to maintain 90% winners, you are going to blow up your trading account because you don't know how to take a loss. I take that thought so far that in my book, I wrote that you should take pride in your losses. And when I start my mastermind group with you, I'm probably going to do this as soon as I finish graduating. I thought about it actually yesterday. I've been structuring actually what we do. But one of the things we could do is take you through the process of describing your losses to a client. A loser would hide their losses. They would avoid the losses. They would just talk about all the winners and all the money they're going to make. That's what a loser does. A winner says, let me go through my worst trading period I've had over the last 5 years. And I'll explain how and why it happened. how and why I recovered from it, and how and why I seriously doubt it'll ever happen again. But from that knowledge, we can develop a risk model so you understand the risk that you're taking by investing with me. That's what a winner does. Can you imagine doing that as a mastermind group, guys? Sitting down, discussing your trade history with a potential investor? That's the stuff I want to be doing with you guys. Okay? That's the fun stuff. Buying at support and selling at resistance, that should be easy. Okay? We need to get you there fast. Okay? I want to do things like elevator pitches, developing your pitch deck, developing disclosure documents, developing your trade plans and your, no, not trade plans, business plans. Right? Okay. Ivan, after the news came out, the volatility was not what we wanted, so I walked away from the scalp, and I was very clear about that. We had 100% retracement in the first minute, so I took a walk. Done. Yeah, Max, you're asking good questions, Max. These are pivot points. So, how do I say this? You need to watch probably every single video I've done for the last 15 years, and you can learn pivot points because I explain it every day. You can also keep coming to these webinars every day for the next 5 years and learn pivot points because I teach them every day. So this is a central pivot point. It's important. That's why it's super thick and super fat. What you really need, the real answer, because you're asking the right questions, Max. You need to go to FX Bootcamp and take the training courses because you're identifying the right things. But you have been here a few times. And I would expect that you already know that. So you're asking the right thing. That's the right question to ask. But it's all been documented, right? Years ago, and in great, great detail. You've just identified exactly what you need to master. Okay, what is that black line? That puts your kids through college. That black line helps you move to a safer neighborhood. That black line puts groceries in the fridge, puts gas in the tank. Okay. Okay, yeah. Famobix brings up a good point. You need to know your swaps. Yes. They can work for you, but they can definitely work against you, right? So notice that the trades that I'm taking, they're okay swaps. They're not great. So like CAD yen, let me show you. Okay, I'm earning 120% a year. Man, my throat's still. Okay, so I'm earning 120% a year. If you're short, you're going to lose 780%. Right? So Famobix is right. You don't want to be short this long term. So what you do instead is you day trade yourself, you day trade the market down, okay? And then you swing trade the market up. The reason you day trade the market down is because the only time you earn or lose a swap is at rollover. So if you're not in the market at rollover, there is no interest payments. So when people ask me what I do and they ask follow-up questions, I'll say, okay, let me tell you how the foreign exchange market works. I will decide on making an investment. And then I'll go to a bank and I'll borrow millions and millions and millions of dollars. Then I'll go to a foreign bank and exchange it for their currency. And over the course of the day, I hope that the currency appreciates in such a way that I make a profit. And then I want to pay back my loans before I owe them interest. And people are like, oh, that's really interesting. Yeah. So at 5 p.m. Eastern time, I'll be charged negative 7.8 but I'm leveraged 100 to 1 on the borrowed money, not on my cash, on the borrowed money. So this could be pretty big. Okay. So I wouldn't want to be short this all day, every day. But if I'm long at 5 p.m. Eastern time, I get paid a little bit of profit. It's like a couple of pips a day. But a couple of pips a day over the course of a year is 1,000 pips. Right? If it's 2 or 3, 2.5, whatever, it gets pretty close. 2.5 pips a day, that's about 1,000 pips a year. Oh, cool. I just get paid every single day. That's all. So it can work for you, or it can be horribly, horribly bad against you. But here's the thing, the horribly, horribly, horribly bad. Let's say this is 7.8 pips. Let's pretend. Let's say it cost you 7.8 pips, 8 pips a day to be in this trade. Yeah, but you should be making 50 to 100 pips a day on the investment, on the asset appreciation. So your cost, right? They call that your carrying cost. Your carrying cost relative to your asset appreciation should be minor. So really, you're making 50 to 100 pips a day, but you're losing 8. You're like, yeah, well, the cost is fine. I can deal with it. So I can tell you there will be a time in the next 6 months where I will be short yen pairs and I will be swing trading them short, and I'll just have to eat that cost. I'll lose 8 pips a day to make 75 pips a day, right? I'll lose 8 to get 80. It's just going to be the cost of doing business. But in a scenario now, I wouldn't do that. So in now scenario, if I wanted to be a bear on this, first of all, I look at this and I'm not at the right price. Okay, this is not the right price for that. That's the first thing. So Max, I think was a Max or someone else said, well, why am I so certain it won't go down? Well, first of all, I'm certain, but I don't know. But this is not the right price for this to fall. But if it was, I'd get ready. So let's say I wanted to trade a double top. Let's just say I ignore all the other stuff. Okay, cool. Now I'm going to go and do this. Okay, and I say to myself, what price do I want to sell? Okay, and it's the same price over and over and over again. I don't have the higher time frames with me. Oops, didn't want to do that. I want to do this. Okay, that's my sell zone. Okay, but that's also preempted. Remember yesterday I talked about this? It may not have been this particular currency pair, but it's the same thing. This told me that I should be concerned about a double top. Okay, so if I was a bear, if I was not certain that I wanted to be a bull, then I would do something like this over the next few days. Okay, and that's how I do it. I would day trade my way down, right? Like my typical day trade is like an Asia fade. Right? So I'll fade Asia every single day on the way down, but before 5 p.m. rollover, I'm gonna take my profit. So I usually like sell in Shanghai and buy it back in New York, and then wait the next day. Very, very typical. Okay, and that saves me 8 pips. Hey, 8 pips times 365 days, that adds up. That's a lot of pips. Okay. Okay. Where can you below the lowest low or above the highest high? That's super easy. Okay. So like if I wanted to buy this today, okay, This was my buy zone. Okay, check this out. I have two choices. In the training course and in my book, I tell you to put your stop here, but you also have the option of putting it there. Done. Super ridiculously easy. Okay. Okay. I'm telling you guys, I can teach you how to trade. Trading is the easiest part of your Forex business. Okay? Managing clients, raising money, being regulated and audited up the yin yang is a horribly expensive and complicated process, especially if you've never done it. If you've never raised millions of dollars, and I've raised millions of dollars, then it's going to be impossible if you don't know, if you just don't know how to do it. So that's that. You are not alone. Thank you for subscribing, guys. Luis and Chester and Pablo, Kona, they all subscribed today. Oh, and Ben subscribed today too. Thank you, guys. So remember, I'm going to do the Fed's thing today, the interest rate decision. I'm going to start it early. I'm going to teach you about the Fed and the Board of Governors. Then we'll catch the interest rate decision live, trade the volatility. Then there's going to be a press conference, right? So this might be a couple of hours today. And I'm not going to send out an email. You're subscribed or you're not subscribed. Now, if your subscription thing isn't notifying you properly, you can go to http://twitter.com/FXBootcamp. And I'll tweet you. I'll tweet you. I like the way you trade. No, Carly, it doesn't work that way. Saudi Arabia, Canada, Australia, Malaysia, Russia, Venezuela, Libya, Iraq, Nigeria, they're significantly different oil. Nigerian oil and Venezuela oil is like on opposite sides of the scale. One is thick and stinky and nasty. It almost looks like tar, like something that a dinosaur would have got stuck in, like the La Brea tar pits. That's Venezuela. You go to Nigeria and you look at it, it's light and golden in color, and you can almost drink it. They're very, very different. Right on, Guy. You have $5 on oil? That's great. Are you Sahu? Are you asking me if every trade I make is profitable? No, of course not. That would be ridiculous. I just told you you should take pride in your losses. Yeah, right on, Raymond. So you can't, like a refinery. So who actually buys crude oil? Here's another way of answering it. Okay, Carly? Who actually buys crude oil? When was the last time you bought crude? Right? Never. You've never bought crude in your life. So who buys crude? Refineries. And refineries then crack it, not frack it, they crack it. Oh, let's do a quick lesson. All right, hang on. All right. Have you seen something that looks like, okay, here's Mother Earth, and sometimes they put a little thing up here. All right. This is how they do it. You heat up oil in this giant tall tower. It's important that it's tall. Okay? And once it's hot, well, how about this? When you heat a liquid, it expands, right? So imagine now you're boiling the oil, but under pressure. So with heat and pressure now, what happens is the oil starts to separate. So up here, oops, I didn't want that. I think I can kill it now. Wow, this is not working today. There we go. Let's try this again. Okay. So up here, it's very, very light. Imagine it's like steam coming off of boiling water. It's the lightest form. Then there's sort of a little bit heavier, and then down here is extremely heavy. Okay? And they're different products. They can be used for different reasons. So let me change this to a slightly different color. Okay. This up here is jet fuel. This might be lipstick. This might be plastic. And this might be tar. And it all comes out of crude. And it's this idea that there's heavy stuff down here, and then a little bit less heavy. Right? A little bit less heavy. A little bit less heavy. And then at the very top, maybe it's just some sort of gas. Okay? It expands, then they can suck it out. So they suck out jet fuel from the top. They suck out, if you don't want to think of it as petroleum, makeup. You can suck out fertilizer. You can suck out, like here, plastic and tar and all this stuff. Okay? From the density. Thank you. So these refineries are actually made for only one specific type of oil. Okay? Because this process is not that easy. So imagine the oil that they put in here. Let's I can't even think of an example of how to describe this. But let's say, and I don't know if this is true, but let's say 1 barrel of oil weighed 100 pounds. Another one weighed 150 pounds. This is a barrel. And another one was 250 pounds. What would make them weigh different weights? What would make them different weights? This is just raw crude oil coming out of the ground, put into a barrel. Does the barrel weigh different weights? No. So why would I would say, let's say, I'll make this red. Let's say this is Nigerian. This is Canadian. And this is Venezuelan. Okay? Yeah, but the source, but what makes the source? The thickness of the oil is one way of describing, yes. The density of the oil. And also imagine the chemical composition of Nigerian oil would have almost nothing similar to Venezuelan oil and a little closer to Canadian oil. So for example, Nigerian oil, Canadian oil is sweet. Oil from Saudi Arabia is sour. Okay? Venezuelan oil is heavy. Okay? Light, sweet. You can also have sour, heavy sour, and all these different things, right? But it is viscosity. Thank you. Okay? But what I'm saying is the chemical composition, density, even the, right, whether there's poisonous gas or not involved because of all the different chemicals, because remember, there's all kinds of stuff in there. This is not oil and gas you put in your car. This is a big, thick, nasty chemical composition, and there's very little similarity between Nigerian oil and Venezuelan oil. So each refinery that makes products has been created for each type of oil. So for example, the only refinery in the world to refine Venezuelan oil into a product you can actually use is in the United States of America. It's not even in Venezuela. You have to put it on a ship in Venezuela and go all the way to the United States to turn it into something useful. And then it comes back and goes all the way back to Venezuela so that the good people of Venezuela can buy it from America. I love it. It's fantastic. Unless you're Venezuelan, of course. And same thing, like I think most of the oil refineries in the United States refine Canadian oil. And Nigerian oil is basically American oil too. That's why we put like the second fleet off the coast of Nigeria, right? And all that kind of stuff. It's pretty amazing. But you can't just say, oh, well, here we are. We built this $200 billion factory to turn Venezuelan oil into jet fuel, but Venezuela's not producing oil anymore, so we'll just start producing Nigerian oil. No, it doesn't work that way, bro, because you need a completely different refinery for that. Okay, so there's barriers to exit, barriers to entry is one way to describe this if you're an economist or, in this case, a financial manager. There are barriers to entry. You can't just say you want into the Venezuelan business because you'd have to like build a whole new refinery and it costs you $200 billion and probably take you 10 years. No one likes to do that, especially if there's no demand. But if you built one and now you're like, you know what, I changed my mind. I don't want to do Venezuelan oil. I want to do Russian oil. Well, you can't just quit the Nigerian oil refinery business. So there's barriers to exit. Okay? So you would look at that. I guess Porter would be the guy that would have written like the true competition here is the entry and exit barriers. Okay. Where do the Canadians get it from? Angels. I don't know, dude. All right. So anyways, yes, I did study this at Harvard, but I can't say I'm an expert. But I have a little bit of background. Okay. And of course, now you can also analyze the downstream and upstream parts of the business like I have, which is really interesting. You can analyze the new technologies coming in, like fracking and horizontal drilling that was invented by Devon Oil. All that kind of stuff. It's a really interesting business. And then, of course, you can go even farther back. Like I've studied the entire history of oil going back to Pennsylvania. And of course, Baku, for example. My goodness. Oh, well, Jonty says, where do they? No, I don't think that was the question. Yes, Alberta, basically. BC and Saskatchewan. I know there's oil and stuff now, but when I was a kid in the 80s, they didn't drill oil in Saskatchewan and BC. It was all Alberta, right? That I don't think that's what the question was. The question wasn't where do they get oil or where's the oil located. It's when it's refined and then sent back to Canada as gasoline, where does that come from? And most likely it's the United States. But there's also refineries in Canada, so that it's really Canadians are really refining it themselves. I'm sure. I can't confirm that, but I do remember as a child that you could, and my memories are more about Edmonton than Calgary, but I remember as a kid driving past like Edmonton at night, and you could see these oil refineries, and they look like something you'd put on a moon. They were ginormous, and it was just all pipes bent in a sort of like Borg ship type fashion. And at night, it's really cool because they have these little lights on all of them, right? So it just looks like something from out of this world. It should be sitting on Mars. And then, of course, they would burn off the natural gas. Can you imagine, guys? Natural gas was worthless. So they would have this spaceship kind of looking thing that was the size of 100 football fields. And then they'd have these giant flames above them. It was really fascinating and out of this world kind of stuff. And that's what I remember from, just Edmonton. Okay, so was that an oil refinery? I think so. And I think at the very top, above the jet fuel, you would have had some nat gas, and that would have been garbage. So you would have just burned it off. So those must have been oil refineries, but honestly, I was 5, so. Okay. Yeah, but pump jacks. Yeah, I grew up with pump jacks. I also have a lot of family in the oil business. Not my town, my province. That's Saskatchewan. That's Saskatchewan. It means swift flowing. It's the a description of the river that runs through Saskatchewan. It means swift flowing or swift current in Cree. Cool. So someone asked, will the gap be filled? Well, yes and no. Typically, and I'll speak more specifically to currencies, gaps fill quick. Excuse me. Okay. If it doesn't fill in the first few hours, then you should walk away from the gap filling strategy. So this has been days, right? Like, move on. Okay. It's that kind of stuff that can get a little dangerous. You're talking about fundamental. Well, how did I describe it on Monday? Exogenous supply shock. Okay. Okay. This is not a technical move, so don't go overly technical. Okay. Prince Philip, you've been to Macon, Georgia. That was the world headquarters of the Ku Klux Klan. Very nice. But besides that, it's beautiful. Wait, it's not beautiful either. So anyways. So don't get overly technical, guys. You need to learn fundamentals and understand that this is an exogenous supply side shock and be able to translate that into some sort of reality. So yeah, we just need one press release from Saudi Arabia and this goes up or down. Making whoopee. Yeah, I call it making babies. Prince Philip is really? Yeah, no joke. Yeah, don't worry about the people with the red hats. It's the one. It's the ones with the white hoods that you have to be worried about. Have you guys seen the Quentin Tarantino movie? I can't think of the name of it. But the Ku Klux Klan, they're riding on horses and they got their flames and they got the hood on, their hoods on. And they stop and they're having this conversation. One of them's like, I can't see out of this mask. I can't see. And then someone's like, the eyes are crooked on one. He's like, yeah, these eyes are all messed up. I can't see, right? And he's trying to look out of one eye, not two. And the other one's like, his wife had made all the hoods for the other KKK guys. And he's like, Mary was up all night working on these hoods. Yeah, well, I can't. And it's so funny. It's so funny. Because it's such a scary topic, and then they take in case Tarantino take this scary topic and makes it very humorous. And of course, riding on a horse with a white hood and a flame is actually probably very difficult. It would be very difficult to see. Oh, to Django Unchained, yeah. So and Tarantino's really frightening that way, where he can take a benign subject and make it frightening. Have you guys seen another Tarantino movie where the Nazi officer is sitting down having a glass of milk with the dairy farmer? Right? And there's nothing, the Nazi officer is polite and non-threatening. May I please have a glass of milk? And so there's nothing scary going on, but you're almost shaking with fear. You're like, that's pretty amazing. So anyways, I gotta go, yo. It's gonna be a big day. Make sure you subscribe if you want to do the Fed meeting. So I'll start sometime before. I'll do a presentation on about the Fed, about the Board of Governors and how the Fed works and money supply, all that kind of stuff. Then we'll get the announcement, we'll trade the volatility, then there'll be some sort of press conference and we'll listen to, last time what did he say? Mid-cycle? And I freaked out when he said mid-cycle. And it was hours and hours and hours later before you probably heard anything about the mid-cycle and what he said and all that kind of stuff. So, I don't know, be there or be square. So, hey man, thank you for being on my team. Peace on earth. May the pips be with you. May our profits be above average. Subscribe, and I'll see you later. If you don't subscribe, I guess I'll see you tomorrow. Cheers. Remember, there's also 4,000 videos on YouTube associated with my work. Go ahead and watch them all for free. Cheers.